Good afternoon. We are it's currently 1 p.m. in the afternoon session of New York time. It's been it has been a good morning, relative easy to trade in the morning session in New York, as I said yesterday. Given the news release today was at 5:30 in the morning. 8:30 in the morning for New York, 5:30 in California. So, um in the West Coast. What is price doing at the moment? So let's talk a little bit about what has happened. So this is 930, delineation of 930. This is 10. This is the initial 30-minute range. Price dropped to half standard deviation for the New York session low of day. Drop and then it retraced. Then it came back down and I have this one here as a one standard deviation. Okay. For New York low day. Basically what this is very simple. Is the high of the range to the low of the range that gives you one. Okay? That's all it is. So if I put that fib here at the high and then at the low, so you see how the 50% 0.5 standard deviation is there. Right there. And then the one standard deviation, it's literally there. It came really close to it, and the reason for that is that it didn't close it, in my belief, is because it hit the low of the day at the zero point 0.5 standard deviation. Okay, and then hit that and it rallied. Okay, now price has gone up back into the range, the lower portion of that range, and that's where we are right now. It's 1 p.m. in New York time, and we will see what happened. But yesterday, though, if you, uh, I'm barely new at this, so I don't have that many viewers, or if hardly anything. But I'm gonna say just because I want it to be timestamped and I want it to be stuck in the video. Okay. Yesterday, here, I streamed and we were. This is 1:30, and then this is 9:30. And I said, okay, I explained why this happened. This is 9:30 a.m. First percent effort value gap for yesterday, Wednesday, the 28th. Price dropped. It lingered here. It remained in a range. I said this, right, at 11 o'clock, which is 2 p.m. New York time, 11 o'clock California time, right here, FOMC came out. So when FOMC came out, look at all of this mess due to FOMC. Look at all this mess. I literally said, I'm bullish. Okay, my view was that it was gonna be bullish. I said it was gonna. This is the zero point 0.5 low of the day for yesterday. So let me put the wording to the right so you can see it. And then this is the 0.1. I mean, this is the one. Okay, so it's right there. So price came here around before 3 p.m. New York time, and it hit that low of the day, right? And then it rallied. Guess what this is? Zero point 0.5 high of the day. Okay, it went up there and then it retraced. You see the sensitivity at those levels? It's crazy, yeah? Then price, because of the news, the FOMC stuff, dropped again. Where did it drop to? To the 1. I'll guarantee you it came to the 1.5. Okay, I don't have the 1.5 here, but it came to the 1.5. and then it went back up. I literally said on the video that I was looking for this as a bullish. Look where we closed. Okay, now price opened at 6 p.m. New York time yesterday, regular day opening. I'm not talking about the midnight New York opening. I'm talking about regular day. And I said, price, I was bullish. That was my stance. Price opened up, dropped a little bit. This blue line is the 50% on a weekly, uh, is the zero point 0.5 standard deviation for the week, for the current week. This is the 1%. Okay, this is the 2%. I don't have it here because I wasn't expecting it to go that high from the get-go. I was expecting a little retracement, and then today I was expecting this move. But nonetheless, it happened yesterday during Asia and during London. Oh, okay. I don't trade those hours, so it's okay. And price rallied. Okay. Price just said, okay, let's go. Price came to this price here, which I'm not gonna tell what that is, but nonetheless, around 4 o'clock in the morning, New York time, price came in, hit it, and retrace. And now we're here. Okay. Now look at the sensitivity around these levels. Okay, that sensitivity. So if price hits one, expect a retracement. If price hits the other, expect a retracement. Okay. Now I will say this, as ICT says, it's time. Okay, it's time. The first thing is time, then it's price. 9:30 open. 9:30 open. Price creates the low. It retraces into the range, drops at the 10:30 level, 10:30 time. At what time does it? What does it do at around that 10:30 time? I mean, it's 10 minutes. 10 minutes. It hits it at 10:21, 9 minutes before. Okay, it hits the 0.5 for New York session, low of day. Okay, initially, and then it retraces. Then it drops back down. It doesn't hit the New York low day at 1 standard deviation because it hits the low day 0.5 standard deviation for the day. Okay, for the day. If all I'm doing is trading the New York session, then this is my aim. And I took a trade here and I took about 22 points, which is all that I'm looking for. 22 points. Okay, I enter somewhere around here and I exit it right there. Okay, now let me show you. See that? 412 was my entry, my sell, 10 micros, cover at 390. That's 22 points, 22.5 points, 0.75 points. Okay, that's about $450. That's all I need. Okay, that is all I need. I'm comfortable with that because I'm gaining experience. And $450 in a matter of 1010, 1020 to 1019 in a matter of 9 minutes, and I'm done. Okay, that's all that I did. That's all that I need. I don't need this whole move. I let the range go, and then I look for my trade. I look for my setup. I look for where the market is gonna go. That's it. I take one trade a day. One trade a day. Okay. Now, I want to show you this. Keep in mind this is a live account, AMP live account. Everything's live. Everything's live. I'm gonna tell you something about this account, okay? I opened this account. I opened it a long time ago, and I deposited 100 bucks here, 200 bucks there, and I blew up all of those accounts to the point that it ended up being $42 in that account. And I said, you know what? I gotta take this serious. Then I studied a little bit more, and some things clicked, and I deposited $500 into that account. Then it became 542, right? Correct. Now this account, March 5th, 2025, it was 542. I placed my first trade with with that balance of 542. March 5th, 2025. Today's May 29th. That's 2 months, almost 3 months ago. Okay? That account has gone up, I believe is, give me a second. That account has gone up. You're not gonna believe it, but I don't believe it. It's gone up 1,325%. 542. Now, to a lot of you that see all these people on passing these funded trader accounts and they make 20,000, 30,000, 40,000, 50,000. To a lot of you, what I've done means nothing to you, right? Keep in mind, this is not a funded traded account. This is my money, and I'm growing it, okay? And it's giving me extra money monthly to pay for my bills and to do the things I want to do, okay? Now, I wish I could show you this, but I don't want to show the account number. And I gotta find, I don't know how to do that without it showing the account number. Because it will tell you 542, it's at $7,268 today. That's 1,325%. And I want to show that, but I don't know. Let me see if I can do this. Let me see if I can figure it out. 1 second. Let me put the disclaimer for like 30 seconds, see if I can figure it out that it doesn't show my account number. It's going to show. Yeah, I couldn't figure it out. It definitely shows the account number, and I don't want that. Uh, That's crazy. Anyways, so what am I doing now? I'm not doing anything. I'm just looking at price. Um, just reading price. I already took a trade. Already making my money for the day. If I see something clear, then I'll possibly take a trade, but I don't. I doubt I will. It's slowly moving today. Let's see what do we have for tomorrow. The news came out at 5:30 in the morning, California time. Um, Let me change this to New York. Okay, so you see 8:30 in New York time. And then tomorrow we have core PC price index at 8:30, so 5 o'clock. Tomorrow should be somewhat similar um, for trading. So you should be able to find some type of um, setups. The the days I don't like to trade is, for example, FOMC, obviously FOMC, PPI, CPI, NFP, because those are, even though on the higher time frame, this mean absolutely nothing. This what I've noticed is that this means anything just on the short time frame for the short term volatility. On the higher time frames, it means absolutely nothing. It's just a spike. It drops, goes up, drops, goes up, and then it continues its move toward the higher time frame. I'm talking about the weekly, the daily, the monthly. It's actually aiming to. Um, but there's another type of days that I don't like to trade. So for example, when we have 7 o'clock news, I don't usually when you have 7 o'clock news, you will have price um, after between the opening range, the 9:30 to 10. You're gonna have price just not side movement, but really tight, so it won't give you any type of opportunity, and you can get stopped out really easy. And that's because it's waiting for the news, for the volatility to to come into the market. So I really don't like trading, and if I do, I'll trade the afternoon session after the news have happened. So another day that I don't like to trade is Tuesdays after a Monday holiday, and I'll explain to you why. Give me a second. Where is Tuesday? The Tuesday is here, and I'll explain why. This is my reasoning. This right here is Tuesday. Focus on this. Okay. Focus on that. That's all of Tuesday's trading. Okay. Now, here's what happened. Market open, came down, and then it rallied. Right? It's Tuesday after a holiday, and then it just took off. There is opportunity here if trading, for example, on the 5 minutes, there's a fair value gap there. It hit there during the macro. and you can buy that, right? There is this order block here. Price came back down at 11:40 New York time, and then it rallied. Okay, but to me, I don't like to chase price, even though it gave these opportunities. I'd rather just let it go. Okay, um, and look for. Then yesterday was FOMC, which is this day. Let me delete that. And then look at how it started, and then up until it moved here, the FOMC, and then price just said, let's take off, and now we're here. And price is just rallies, drops, rallies, probably gonna drop. Um, that's where we are. Go to the 1 minute again. It's gonna be about 1:30 in New York time, so the afternoon session is about to start. I use color to separate things. It automatically just tells my brain what everything is. That's why you see a lot of color. Purple, first fair value gap. Green line, dotted, delineates 9:30 in the morning and then 1:30 in the afternoon. This is lunch hour that just passed. I usually try to. It may seem like a lot on my chart, but everything's got a purpose. I know what everything is. This is just my retirement account. Oh no, you can't. Didn't come up on your screen. So it didn't it? It's pretty boring. What's happening so far? This was a good trade. You know, you could actually trade every single hour. Excuse me. So for example, I like you see the gray lines. So the darker lines delineate the 4 hour every 4 hours. The lighter gray lines delineate every single hour, the beginning of every single hour. So another thing that you can do, very simple, is delineate the high and the low for every hour. And you can do this for the 4 hour, you can do this for the daily as well, you can do this for the weekly, even the 15 minutes if you want, you know, 5 minutes, 1 minute, every candle is the same. If you delineate, for example, the 1 hour high and the 1 hour low, okay? So what do I mean by this? This high, no, this high right here is the high of the 10-hour candle. This is the low. So I'll do this. That's the high. This is the low. The reason why I said this was a good, very good trade, it's because when we open the new candle, at no point in time did it take the previous 1 hour high. And then price dropped, and then price went up. Okay, it just went up to a fair value gap. So that's all it is. I don't have time to mark every single fair value gap, but it went up to a fair value gap at a premium level from this high to this low, premium drop. That was a good trade too as well, but there's no time right there, right? It's 11:30 or so you think. But anyways, this is the macro. That's why I said this was good. So the high was not taken, so that gave me an indication. Okay, it's gonna go short, correct? So we're here. The macro comes up. We try to take that high here. We couldn't do it. So price just dropped. Where did it drop to? The low of the day. Now, keep this in mind. Okay, I'm just gonna use this. I'm gonna recycle the same things, the same lines. That's the high of the 11 o'clock hour. This is the low of the 11 o'clock hour. As soon as lunchtime hit, price took the low of the previous 11 o'clock hour, came to its goal, and then it rallied. Right? You see it very clearly. Took out some highs, relative equal highs, right there. Now look at this. We can both agree that that's the high of the lunch hour, right there. And we can all agree that this is the low of the lunch hour, right there. Now look what happens at 1:30, at 1 o'clock when the 1 hour starts. It takes the high, liquidity, and then it starts dropping. High, break of structure, retracement, drops, retracement, drops. Yeah. Now there's a high for the 1 o'clock hour, but there's no low yet because it's barely 134. But every single hour you can take at least 10, 15 points. Now the question comes, why don't you do it? Well, because this is how I'm gaining experience. As the title of this stream says, I'm reading the tape, right? I'm gaining experience by doing that, by reading it that way. I'm looking at those patterns, what happens, and you can go through London as well. Look, we're gonna go through London, and we're gonna mark. There's a few hours here that are not marked. 8 o'clock, and then the 9 o'clock hour. This is 7 o'clock. This is 6. Why is this? That's not supposed to be. This one's supposed to be darker. This one is supposed to be lighter. Okay. So look at this, right? 7 o'clock. That's the high of 7 o'clock. That's the low of 7 o'clock. Price goes up. Price takes the low, and then price retraces. Okay, what's the trade here? Well, wait for break of structure, and that's your buy. See? Break of structure, that's your buy. That's a fair value gap. Comes back into it, and it rallies. How many points is that? 653, 687. That's 34 points, right? Pretty good. Okay. Then you have this becomes the high. This is the high of that hour, the 8 o'clock hour. Look at this. This is the low. Price goes up, takes the high of the 8 o'clock hour, liquidity. There's a break in structure right here with the fair value gap. Retraces, 930 opens, aim for that low, done. So every hour of the day, you can get something. Okay, I think that will be all for today for the streaming. Price is just not doing absolutely much of anything. Um, Lines, and that's it. Hmm, that seems to be the first percent for value gap for the lunch hour. 28.3 for the afternoon session. I'm sorry, what am I? So this is 1:30 New York time. First percentage for value gap. All right, people, that would be all for today. I had one person watching the stream today. To that one person, thank you very much. Thank you very much. All right, everyone. Thank you. Have a good day. Be brave. Be safe.